Alrighty guys, before we get started, I just wanted to go ahead and draw out exactly what I'm looking for on this dip buy strategy, alrighty? So this yellow line right here is going to be our VWAP line, and that's the line that is going to be most important in going into this strategy. The second is going to be our candlesticks or the way the price is moving. So what we're looking for here is a move up in price, okay? And as the price comes back down, we want to see it bounce off the volume weighted average price. That's our first test. It goes back up. Now when it comes back down again, that's our second test. Okay. And then on our third test, that's where we're getting our buy signal to get into the stock as confirmation to get long, also telling us that buyers are stepping up. All right, you guys, so we got the move up, come back down, test of VWAP once, second test here twice, and then this right here is our third test and our entry signal to get in long. Alrighty guys, I just wanted to demonstrate that for you real quick on Paint. Now let's go ahead and get into a chart example. Okay, so we have here United States Steel, and as you can see, we got the volume weighted average price here. Okay, we got the move up, and then we got the correction down. It's tested it once. We got another move up, come down, test it twice. Okay, there's our first test. There's our second test. And there's our third test there. And that's where we're looking to get into the stock, to buy the stock, to ride the wave back up high, okay? Now, when we get in here, we have to identify our risk level. And once again, the risk level is going to be the break of the prior resistance low. So it's going to be right at this level here is where if the stock breaks this level here, we want to get out of the trade, as that could potentially be an indicator that the stock is breaking down. It's broken underneath VWAP and no longer holding trend. So there you go. Got that buy, and then we sell it right here into the pop. If we risked 840 and got in at 843, let's say, 46 would be 1R, 49 would be 2R, 52 would be 3R, and then 55 is 4R. So once again, if you're risking $100 on this trade, you just made $400. So the risk reward is pretty good on that one. And so that's our example for this evening. Let's go over another example. What's up, traders? Alrighty, let's get right into the video. Just to start, I just want to let you know what we're looking at here. We are looking at a dip buying strategy involving the volume weighted average price study. That's a study that can be activated up here through Edit Studies on Thinkorswim. And it's going to be this line right here. Matter of fact, let's just go through a walkthrough on how to put it on your screens. You go to Studies, Edit Study, do a quick search for VWAP, and it's going to be right there. Go ahead and add it over, and you got VWAP on your screens. All right, so this is going to be a dip buying strategy. You're going to be buying the test of volume weighted average price, the yellow line here, on the third test. On the third test, that tells us that the stock is confirming that the volume weighted average price is acting as support, telling us that buyers are stepping up at that level, giving us more confidence to buy at that level, and eventually sell into the initial rip or pop up in price. All right, so let's go ahead and look at a live example, or not a live example. Let's go ahead and look at an example here on what I would be looking for. So what we see here is a big move up. This is Carnival cruise ship lines. And so we see a big pop here in price. It goes from $13 all the way up to about $13.43. Okay, and then as time goes on, we see that first correction here. Okay, goes up, corrects down, tests the volume weighted average price. So we're going to go ahead and circle this area here. That is our test number one, confirmation number one. Now what we're looking for is confirmation number two. That tells us that this level, this volume weighted average price level, is indeed acting as support. So let's go ahead and see what happens next. And boom, this is right here is where we get it. Round two, correction down to the volume weighted average price. Alrighty. Let's move on. So step number three. So once we see the second confirmation here, what we're looking for is to buy the third dip. All right. So we see that we have a one test, a two test, And now what we're going to be looking for is that third test, which is right here. Now this level, okay, if we back it up a little bit, and we can just see how the stock is reacting. So it goes up, and then right in here is where we're anticipating that dip buy, okay? So we want to see it, test it, touch it, and then right about here you can see we weren't the only ones looking at that green volume or green bar volume coming in. Buyers are stepping back up, and that's potentially where we want to enter. Now our risk level is probably, what I would recommend is probably the low of the previous dip. So that way you know that if it breaks down past that level there, that it's probably going to break down and continue to go down. So what we see here is our third confirmation. That's our buy signal. We get in there, and depending on our risk, I like to sell as like 1R, 2R. So for risking 1330 here, our entry was 1340. That's 10 cents of risk. So what I would be doing is I'd be getting in at 1340. I'd probably sell some at 1R, 1350, some more at 1360. That would be 2R. And then this at 1370 is 3R. And that's definitely a good return on your investment there. If you risked $100 on this trade, you made $300 if you sold here at 3R. All right, so that was a quick example. You can see here it actually comes down and tests and holds that level again into the close. All right, so that was that quick video there.